Hi there, eToro. I didn't do my weekly review yesterday because it was a holiday in the UK and the US, so I got to spend the whole day studying. But now it's time to look at what moved the markets last week. I quickly wanted to talk about the exam that I'm studying for, well, exams that I'm studying for. So I'm in the process of doing a qualification recognized by the Financial Conduct Authority. This is part of a requirement to be a PI on eToro, Popular Investor. I've done the first exam and I'm in the process of studying for the second one, which I will do in 2 weeks' time. You can see that the qualification takes 284 hours. And so if you work that out in terms of business days, so 7 hours working, 1 hour break, that's 40 days full time, 2 full months that you're supposed to spend studying this for this qualification. I'm trying to do this in 3 months on the side of doing my full-time eToro job. So it's been a little bit intense recently. I'm studying mornings, evenings, weekends, holidays, but I'm hoping to have this done and dusted by the middle of June, and then I can get back to creating videos and engaging with people. So apologies, I have not been able to answer all of your questions, and I hope to get back to that very, very soon. So today is the 1st of June, and if we quickly look back over the past month, we've got the NASDAQ are the candles, and the SPX, S&P 500, is the line in orange. So the S&P 500 for the month of May was more or less flat. This is not precise, I've eyeballed this, but more or less flat for the S&P 500. And the NASDAQ has had its first red month, I believe, since October last year. So it lost nearly 2% over the past month. My portfolio has also lost about 2% over the past month. You get some red months a few times a year. That's how it goes, and over the long term, that's fine. Okay, looking back, so when I look at my stats, I usually look in increments of 1, 2, 5, and 10 years, looking back at my performance. So the shortest time frame that I look at usually is 1 year. So going back 1 year, I've got the NASDAQ is blue, the S&P 500 are the candles, and I am the line in green. So towards the middle of May, everything took a little bit of a dive. The S&P 500 recovered, but the NASDAQ recovered more, and I've recovered more than the two of those. So it was a rough May for the markets and for my portfolio, but I think that for some of the industries that I'm invested in, the growth industries, it looks as though they've put in a bottom. And we can see this. I did this last time I did my review. I looked at the charts for a few different ETFs that represent roughly those segments or industries within the market. So again, candles are the S&P 500. We can see that some of the biggest performers through the beginning of the year, and actually through last year too, had a major sell-off and seemed to have found a bottom somewhere in the middle of May. So the biggest riser was TAN, which are solar stocks. Not all solar stocks were overpriced, but many were at this point in time. And so there's been a multi-month sell-off in that sector. So now I'm quite interested in refocusing my assets in good, well-valued companies in the sector, which is something I've been doing over the past week, but now I'm going to consolidate some of my positions from other sectors into the sectors that have been hardest hit, but are promising for the future. I've included ARK in here because I'm not invested in ARK, but because a number of sectors have followed ARK in its sell-off. I mentioned last week or the week before that I think ARK is having an outsized effect on certain industries, unfairly, but you know, it is what it is. We can also see that Chinese tech rose quite a lot. Again, there were many companies that were, I would say, fair value when the sell-off began, and it looks like it's found a bottom. It has recovered quite nicely. SMH, which is another one that I am particularly interested in, dropped off sharply in May after tracking the S&P 500 quite closely for a while, but has also bounced towards the middle of May. So what this is signaling to me is that we might potentially be seeing a turnaround in some sectors. I'm not sure that all of the companies in ARK's funds will see the investment inflows that ARK saw in the beginning of this year and late last year. I don't know if you've looked at the composition of some of those ETFs. There are companies that aren't even making revenue. They aren't making money yet. They're still investing, and they're in the R&D phase, multi-year investment phase before they even have a product that they can take to market, which is not going to work in an environment where rates are rising. All right, onto cryptos. So we all know what happened here. BTC, Bitcoin dropped below 30K a coin, and since then has been consolidating, getting close to retesting those lows, and now is firmly in a consolidation phase. Ethereum and others have followed Bitcoin to varying degrees and recovered to varying degrees, and now the market is just trying to find a direction. What was quite interesting is that over the weekend, or maybe on Friday, the US financial authorities have said that they want to take a role in the cryptocurrency market. Now, this was always going to happen, but it's very interesting for a number of reasons. It's good that people are going to get some protection because, as we all know, there are a very large number of scammers out there, but also people that have the ability to move the markets in significant ways, which they should not be able to do. So protection is one interesting perspective, and I'm glad it's happening. The other is that this legitimizes cryptos in just about in a way that just about nothing else can. So a government, the US government, saying this is real enough and big enough that we need to take a hand in it, to me is a very, very bullish signal. This is saying that they now think this is not a fad. It's here to stick. We need to get involved. So I think that's a great piece of good news that came out with regards to cryptos. So if we just look at the performance, these are on all the cryptos, of course. So we can see on the 1 month chart, most things are massively, massively down. What's quite interesting is that Ethereum has kind of held its own fairly well. And again, Cardano, ADA, is actually up for the month. So Bitcoin, obviously the big daddy of cryptos. I think a year ago or 2 years ago, we wouldn't have seen other cryptos diverging this much from Bitcoin in a fairly large crash and holding their own. So I'm not sure what this says about the market, but it feels like this is signaling maturity of other things in the market. All right, and on to commodities. So I've been sticking close to commodities and updating everyone about commodities recently. And the reason is that commodities and basic materials are the things that are used to create things that we buy and use. And some of these have had a fantastic run. So for example, lumber, which has been selling off quite a lot recently, had a fantastic 1 year gain until the past 2 weeks or so. But many other commodities and basic materials have done quite well too. I think some are just starting to take off, for example, gold. So last week and over the past week and a half, we've seen China try to suppress the price of certain commodities and materials because as an exporter of stuff to the rest of the world, if their costs are increasing, then their margins are crushed, then people might start looking elsewhere to buy things instead of from China. So the news that China was doing this, effectively stopping people speculating on the price of commodities and over ordering commodities and materials, affected the price of certain commodities for a while, but it seems that the market thinks that China's hand in trying to suppress these prices is not going to be successful for the long term. Time will tell, but I think the fact that the US is now recovering and Europe is now recovering, and then the emerging markets will be recovering, demand for these at least some of these commodities is going to continue. So we can see some of these prices have rebounded recently for various reasons, and I think that's going to continue, at least for some of them. So just pulling up the chart here, you can see lumber increasing massively over the past year and then giving some of that gain back sharply over the past few weeks, whereas copper has paused. I'm not sure what the price direction for copper is, but it's definitely paused its massive rally, and we'll see what happens next. I will continue to hold my stocks in copper miners because I've got a feeling this rally will continue for maybe even up to a year. Other interesting news out of China. So the population growth in China is looking as though it's going to drop off significantly, meaning an aging population going into the next few decades. An aging population means a smaller ratio of those people that need support versus those people that are in work and generating revenues for the government. So China has stepped in and acted quite quickly to change their stance on how many children people can have. So this is a very interesting article that shows over the long term the population growth in China. What's interesting to me is that what I've seen happen out of China over the past 6 months, 1 year, I guess even in response to the coronavirus pandemic, is it's a country that's willing to respond strongly and quickly when problems appear. And it doesn't necessarily take the action that is going to benefit them the most in the short term, but quite often takes policies that might be slightly harmful in the short term, but are better for the long term. So a very controversial country. There are lots of, I think, bad things that have come out of China too, but very interesting to watch from an outside perspective in terms of economic policy and the maturity of China. Something else that has occurred recently is the Chinese currency has strengthened quite a lot, and this is another thing that affects their exports. And so the government is stepping in to cool that rally with a few very strong actions. I'm curious to see how quickly these will work in cooling down the currency's rally. But yeah, we will see. All right. In terms of the UK, so over the past 2 or 3 weeks, I've been talking about the coronavirus variant that was originally found in India, landed in the UK, and then very quickly becoming what is now the dominant variant that we're seeing within our population. So the Boris Johnson on Thursday, he said, there's nothing on the data that we think we need to be worried just yet. But again, I don't think anyone really knows. So this situation that we find ourselves in is fairly new. So it is now the dominant variant, I think, across the board, and is growing rapidly. But the question is, we've also lifted a number of our constraints around social distancing, and people are mixing a lot more through our country. So is this variant spreading very quickly because it is a variant that spreads quickly, but also because people are interacting a lot more in our population? Or is it something more serious? So I don't think anyone knows the answer to that just yet. And there are people on both sides of the argument saying there's nothing to be worried about, and then others saying there's a lot of stuff to be worried about. We need to be very careful. So I think we will probably see our government commenting on this over the coming weeks. But I really, really hope that it doesn't become more serious, not even because of how it might affect the markets, but just because I think the world needs to move on from this. All right. On the upside, so I think just about every other day we're seeing information come out of various governments around the world saying growth is surging. And, this is affecting everyone's fears about inflation, but also don't forget to be happy about the fact that growth is surging. Our economies are recovering. People have jobs that are making money. So sure, there's inflation on the horizon. We're not sure how that inflation might behave in the short term, but let's celebrate the small things. So it's not just the UK that's seen this kind of data. I don't have the article open, but it's happening through the Eurozone too, which is fantastic. Something we're also seeing across the headlines is that house prices are just increasing everywhere. The US, Australia, the UK. And this is making people quite scared. So, I mean, if we look at the annual house price change in the UK, it's currently sitting at 10.2%, which is insane. Absolutely insane. So this is probably a symptom of a few things. One of them is that there's a lot of pent-up demand. People weren't willing to or able to, over the past year of lockdowns, go and buy houses. So now there are a lot of people on the house hunt. We also have very, very low interest rates, so mortgage rates are very attractive. People are probably buying houses that are a little bit more expensive than they should be buying. And so that's all okay while the rates are low, but when the rates start increasing, and they will increase, when they start increasing, that means the premiums, the mortgage repayments that they're making are going to increase too, and we're probably going to see people unable to afford their houses, which will be terrible. So we could see a number of defaults on those loans. I suspect what we will see fairly soon, so in the next few quarters, is that the pent-up demand will be fulfilled, but also the prices might rise so much that people are unwilling to pay those prices anymore. And so we could see a very sharp decline on the other side of this rapid increase, creating a little bit of spike, which would be good. The prices, they've gone up too quickly. They need to come back down to earth. What's interesting to me is that London has seen the smallest increase. So London is where I live, and anecdotally, I've seen a number of people in my situation, my kind of demographic, young families moving out of London because the tendency to let people work from home more, probably on a permanent basis, means that they can live further out because they're traveling in less frequently, and means that they can get more bang for their buck. They can get bigger houses in other places. So house prices have increased outside of London quite a lot, but inside of London they've increased, but not nearly as much. And this increase is probably attributed more to first-time buyers, people trying to get onto the property ladder. So I'm wondering if this pattern will persist, or if we'll see a net migration back into London when the world opens up. I'm not sure. Okay. So what will we see through this coming week? I'm quite interested in this topic. So the US has proposed a global minimum tax for companies, and other countries have said, okay, we're interested in this. The initial rate that the US proposed was too high, but now they've reduced it, and now the world is saying, okay, we're kind of interested in this because this is potentially a way to stop companies, massive multinational companies, underpaying their taxes like they have for decades. So the EU seems interested in this, as I'm sure a number of other countries are, because they could make a lot of money out of it. A lot of money that these companies should be paying in the first place. Although I wonder if we'll see these big companies just moving their headquarters to other places that don't participate in this tax, but time will tell. For the past few weeks, we have heard and seen headlines about the price increases in lumber and copper and steel, etc., the basic materials and commodities that I just spoke about. And now those are kind of filtering down to the rest of the economy. So I expect we're going to see headlines about price increases in other places now. And this is the definition of inflation. So prices are increasing, so the pricing, the power of your money is decreasing relative to what it can buy. So let's see if this is going to be persistent. If Tesla's raising their prices, you know that the situation has gotten pretty serious. Okay, And lastly, I just wanted to talk about stats. So I should get my monthly fact sheet from eToro quite soon. I haven't been able to answer people's questions. I'm sure that many people are concerned that the portfolio has been quite flat for a few months. This is normal from time to time. So we invest in companies over the long term that are going to be multi-baggers. They're going to make hundreds of percent because they are significantly undervalued. Maybe not all companies, but a lot of companies in our portfolio will. But we cannot time when the market decides or realizes that these things are undervalued. So you'll see in my portfolio over the years, there have been times when the portfolio drops or it's flat for a number of months. But I wanted to show you the long term just so you have an idea of the fact that this is fairly normal. This is how it goes. And this is how you get to make a return. So my now 6-year return on eToro is 642%. All right, that's it for this week. Have a great week, and I will talk to you next Monday. Goodbye.